everyone, and thank you very much for taking part to this regional session. This is the first one of 5 regional sessions that the GSG Summit is hosting this year. As you know, our national advisory boards, our 27 national advisory boards, are the core of the GSG mission and activities. They represent the national platform, gathering the entire impact investing ecosystem at national level. And so during this session, we really want to hear more about their works, their members, some concrete cases. And this is what we are going to do in this session. Of course, for this half an hour, we will focus on our European now. So I leave the word to Giulio, our session moderator. He will introduce you the framework of this session, the topic, and then we will hear one by one to our notes. Please share your comments, questions into the chat box. We will take a few minutes after a couple of speeches to read them, so do it. And to all the speakers, please stay into your 7 minutes, so we really will be able to hear from everyone and maybe also to have some sort of debate. Thank you, and to Giulio, thanks.
Thank you. Thank you, Raffaella, and thank you to the GSG for having me here and moderating somehow. I hope in a useful way this exciting first regional session of the 2020 Impact Summit. So it's a real pleasure, and I thank you all. So I will start with a question. So why a regional session? Well, because impact investing is not just an idea. It's not just a set of good ideas, a bunch of nice ideas on how the real life should be. Rather, impact investing is a way of reasoning, a way of living, informed by the will to change the world for the better. It's about our real lives and the lives of thousands, well, millions, potentially of people. And that's why it's context driven. And this is why we need a regional session, I think. And what about Europe as a region? Well, in the last years, we have seen many impact investing initiatives dealing with access to social services in Europe. But this is just one piece of the story. And before leaving the floor to the speakers we have today, I would like to spend a couple of words to describe the bigger picture, which looks really promising to me. And as you might know, Europe is a socioeconomic space where historically we have always cared about welfare and well-being. With something like almost 500 million people, we spend almost 50% of what is being spent globally in welfare goods and services. And more, this huge amount of resources is spent through a highly institutionalized set of mechanisms, and its name is the welfare state. Now, the interesting thing is that the welfare state is a fundamental element for the working of our European democracies, but I won't go into details on this. I would rather just say that it's almost 40 years that here in Europe we are debating and trying to advance a modernization process of our social protection systems. The rise and spread of new social needs and social risks, and recently the COVID-19 pandemic crisis, are now coupling with older social risk and needs. So when debating on how to reform our social protection systems, what is clear is that it can't be just a change in the location of expenses. We need to gradually recalibrate our social protection systems to be able covering new social risk and needs while keeping to deal with the older ones. So here it comes the political and institutional space for impact investing in Europe. So far, focusing on social services, impact investing in Europe helped to rationalize the world system, playing as a strategic ally of those serious recalibration attempts of our welfare states under pressure. These happen in different ways, of course. Many impact investing initiatives aim at improving or scaling up already implemented services, while others works to align incentives that are not correctly placed. Also, I would say impact investing initiatives provide their strategic contribution coordinating and integrating services, so through the creation and exploitation of synergies among different partners. And almost all the initiatives we have some kind of preventative feature, so they free up some resources that can be reallocated. And finally, impact investing initiatives allowing the redistribution of financial but also political risk among various actors, allow innovating and experimentation. So let me conclude with a final and very general comment. As you might have seen, here is not just a matter of, I mean, although European impact investing is very much focused on social services, here is not just a matter of fixing some issues we had in the social service domain. Of course, we are also on this, but it's something broader in my view. As the improvement of social services is embedded in the design and the reshaping of our European social protection systems, any contributions coming from the impact investing is a contribution to the design and shape of tomorrow's institutions. And this is not, you know, an exaggeration, it's not an hyperbole. This is what happens usually in history. And it happened during the Great Transformation following the Industrial Revolution of the 19th century, for instance. Society's responses to the excesses of capitalism during the Great Transformation went through the aggregation of interest and collective mobilizations of against a market running somehow out of control. However, this process had been preceded by a multitude of experiments, a slow process of self-protection which proceeded bottom-up, initially without a large-scale organizational frame or homogeneous ideological cohesion. At the local level, spontaneous and contingent initiatives to respond to risk and needs arose without mutual connection. So this that I would define as social effervescence involve many different actors with the resources of very different origins and dimensions. The dynamics leading to the transversal connection between these initiatives and actors were neither linear nor systematic. Yet it was from this melting pot that the ambitious project to build mass social protection and then the effective institution of the welfare state was born. So today, this social effervescence is back. It has a clear face, and its name is impact investing, in my view. So not by chance, we are now more and more often speaking about new industrial revolution. So here it comes the very nature and the ambition of the European impact investing experience. So without further ado, I now leave the floor to some friends and colleagues and experts that will represent this European nature of impact investing. I now ask Mika Pyykkö to tell us something on the Finnish National Advisory Board strategy to innovate welfare and its perspective on outcomes instruments. So please, Mika, the floor is yours.
Thank you, Giulio, your introduction, but you were talking something about experts and then you give a floor to me, so I'm a little bit surprised. But anyway, maybe I can, good afternoon and good morning and all colleagues. Maybe I can say a couple of words about our National Advisory Board before I go to our Finnish story. we have had our national advisory board since 2017, and at the moment we have 13 members in our board, and those members are coming from all important stakeholder group in our society. I mean, institutional investors, asset managers, service providers, and what is very crucial for us, there are also people from public sector, for example, from the Ministry of Finance. And I think that this sounds very strange for you, but our National Advisory Board is appointed by our government since this year. So it's more or less that kind of also that kind of official committee of our system. And then I don't know if I was asked, but we agreed with Giulio and Rafaela that I tell our Finnish story very briefly, and that story starts 2014 when Sitra started, Finnish Innovation Fund Sitra started its development activities in terms of impact investing. And first we talked that impact investing could mean something like impact venture capital in Finland. And the reason was that Sitra was one of the main players when the idea of venture capital imported to Finland. But then we recognized quite soon that in the Nordic welfare society like Finland, the best way to really prove the additional value coming from private capital is to combine private capital to public money, to taxpayers' money, because as you know, that in Nordic system, public sector plays a very crucial role. So after that idea, we really much focused on social impact bond, because we really had the idea that this is the best way to prove how private capital and public money can do something together, something better, something sustainable together. And when we started to work with the different kind of SIP initiatives, we recognized quite soon that in fact we are talking about proactive and preventive measures, those measures about which we have been talking in our society already years, but haven't been able to do very much. So we had first SIP as an instrument, then we had the idea by using this instrument, we can really focus on proactive and preventive action. But after that, after 2-3 years working with the SIP model and different SIP projects, we understood that in fact we are talking about much bigger change possibility in our society. We are maybe talking about the Nordic welfare society 2.0, and that means that we wanted to make that kind of systemic change happen in how our society works. And we talked that social outcomes contracting, the idea which came after our experiences launching different kind of SIPs, that really the social outcomes contracting and focusing on proactive and preventive action could mean that the welfare society would really move to next step and become again the real welfare society. Instead of focusing too much thinking how we can find public money enough to allocate at different kind of operations in order to fix already existing problems, we could use outcomes contracting as a tool to really create health, well-being, sustainable environmental issues, and at the same time economical growth. So we really believe that outcomes contracting is the best way in our kind of system to combine private capital and the idea of impact investing to the public money. And COVID gave us a very strong booster in terms of outcomes contracting, and now we have an initiative in our government that they should establish 100 million euros outcomes instrument. We really call that instrument next year when our government has a budget meeting. And under that umbrella instrument, we have an idea to launch different kind of projects in terms of proactive and preventive action, for example, well-being of families, type 2 diabetes prevention, independence of the elderly, but also, for example, business competence and well-being of sole and micro entrepreneurs, and also we have some climate and environmental issues to plan have that kind of climate and environmental issues under that possible instrument. If our government doesn't accept that idea next week, we have an idea that idea will anyway include it to our plan how to use that EU recovery money during next years. So we have worked very much from the outcomes contracting point of view And our NAP has supported that idea, including the idea that the Center of Expertise for Impact Investing was established in the beginning of the year. And our strong idea behind this all is that by doing this in the Nordic welfare society like Finland, this is the best way to support the growth of the whole impact investing market. And we really hope that the impact investing will mean also something else than only outcomes contracting in coming years. Thank you. I left 1 minute to someone else.
Yeah. No, thank you very much, Mika. Just a clarification. I said experts and friends. So you can choose the category to which you prefer to belong. But thank you very much. And I now ask our friends, experts, and colleagues from the Swedish National Advisory Board, Jenny Carenco and Mats Olassun. I hope I pronounced almost correctly the names to lead us through a kind of hybrid model of social impact bond. So the floor is yours.
Yes, thank you so much, and thanks for this opportunity to present the Swedish social bond. And with me I have, so I'm Jenny Carenco, and I'm on the board of the Swedish National Advisory Board for Impact Investing, and so is Mats Olassun, who works for one of our biggest banks here in Sweden, SEB, and he's responsible for sustainable investment there. I will first just present a little bit of the background of this bond and of the issuer, and then Mats will present the actual instrument. And we will keep close track of time, so I'll with no further ado go into the more interesting part of the presentation. So what we have realized is that there are a few limitations to the social impact bond as we know it. One of the reasons is that since very often it's a closed or a bilateral or two bilateral contracts structured as a loan or a conditional loan, many institutional investors that we've talked to are not able to invest in such instruments. Their fiduciary duty prohibits it, and it also makes the possibility to scale the interventions that are financed through social impact bonds. It actually limits it a little bit, since it's only a certain type of capital, at least here in Sweden, that could invest in a traditional social impact bond. So we worked for over 2.5 years with the region of Stockholm, who wanted to try a new financing mechanism to finance a diabetes prevention, where they got some risk sharing with the investors or the financiers by financing the diabetes prevention through an impact bond like instrument. So what we did was basically that we modeled the cost to the region of Stockholm, who is the public healthcare authority here. It's organized on a regional level. We modeled the cost of diabetes healthcare costs, and we identified the pre-diabetics and the likelihood that pre-diabetics develop diabetes type 2. And we modeled then what it would be worth to actually prevent the pre-diabetics from developing diabetes type 2. And to make this intervention and the financing model scalable, we chose not the traditional social impact bond, but a regular listed and fully underwritten bond, so a bond, if you want, but where we tied the interest, the coupon rate, and the repayment mechanism to the outcomes in the intervention that the bond finances. The intervention is very much alike the other types of intervention that you would see financed through a social impact bond, but the region of Stockholm truly believes that by using the financial markets and a traditional bond, so to speak, that they will open up the possibility to invest in such a bond to a much broader spectrum of the financial market, and especially to pension funds and other institutional investors. So the region of Stockholm asked one of our major Swedish banks, SEB, who also, if I'm not mistaken, and Mats, please correct me, was the first bank that issued a green bond in the world, and who has long experience in sustainable bonds, to help them structure the actual instruments. And Mats, I will leave the word to you to explain a little bit how the instrument works and how it's structured.
Thank you very much, Jenny, and hello everyone. It's correct that SEB helped the World Bank to issue the first green bond for institutional investors some 12 years ago. And as Mika just alluded to, in the Nordic welfare model, the public sector plays a very important role. We are less used to having private interaction in welfare development. And therefore, the case for having external financing for healthcare, even preventive healthcare, does not come naturally to mind for many people in the Nordics. However, among the three parties that have been working on developing this, there is unity that the case for external financing rests on, one, that in preventive interventions, the cost saving materializes only with a delay. And secondly, there will always be an element of uncertainty. So in order to make these preventive interventions happen, the region Stockholm as a public entity saw a case for external financing, and also to get an element of risk sharing from the private sector. So in a way, this is a private-public partnership to try a new way of funding preventive care, and thereby freeing up resources that can be well used in other areas of the healthcare system. So the ambition has been to find a financing model that can be scaled up. What we have done this year is a pilot project with close to 1,000 participants at the most. But the number of pre-diabetics only within region Stockholm is much, much larger. And if this pilot project turns out to be successful, the intention is to scale it up to reach out to much more of the pre-diabetics. And if successful, that would primarily save a lot of human suffering, but also save a lot of money for the region of Stockholm that can be used for other very important purposes. So, as Jenny mentioned, in order to make this an instrument acceptable for mainstream investors, we have used completely standard standalone bond documentation for a Swedish krona bond, something that investors are very well familiarized with. It has its ISIN code. The bond is settled at the Euroclear in Sweden. And the size of this bond is 30 million Swedish krona, roughly equivalent to 3 million euros. And we have a maturity of 5 years, where the use of proceeds is destined only to go to this pilot project of diabetes 2 prevention. So the structure of this bond is a combination of a regular fixed underlying zero coupon bond that the region Stockholm issues, in combination with a variable proportion, which is based on the success rate or the outcome of the bond. And the investor's total return is hence dependent on the latter to a larger extent. As the three parties developed this, region Stockholm and Skandia, the insurance company, tried to figure out what would be a reasonable variation of the outcome financially, and ended up with a solution where there is a cap and a floor. So the cap is set at a cumulative return of 10% over the 5 years period, and the floor is set at minus 20%. So if the project is successful, the investor Skandia will get a better return compared to if they were to buy and invest in a regular bond from Region Stockholm. At the same time, Region Stockholm will, in such a case, save a lot of money from less excess healthcare needs from this part of the population. And the floor implies that the investor would only get back 80% of the invested money. So as you see, there is an asymmetry in the financial outcome for the investor. And this was reached as a negotiation between the parties that both parties felt was a reasonable setup. If and when these solutions are scaled up and we approach a much larger number of investors, that will be a more difficult process, and investors who like the setup will be able to invest, and others will refrain. So with that, I think our time is up, but we're happy to take questions if you have.
Thank you very much. I'm now using the privilege of the moderator to slightly change our schedule, because I received a request from another good friend, Yaron Neudofer, from Social Finance Israel. He needs to leave, so I'm giving him the floor to speak about an interesting initiative on elderly loneliness. That is exactly one of the new, well, it's getting old because we are a bit, we have some delay in addressing this issue, but it's one of the new social needs and risks we are now facing. So just a very quick reminder, please, all those who are not speaking, if could please unmute themselves, because there is a lot of noise in the background. Thank you. Yaron, the floor is yours.
Thank you very much. Happy to be here and see all the new friends. We sound like the Eurovision Song Contest. Here are the results of the Israeli jury, of the Israeli NAB. So I have 3 points that I want to share with you. The first one is really regarding the performance of the Israeli government in terms of dealing with COVID-19 and with the specific Israeli conditions. We are now in Israel in a situation that we have ongoing election campaigns because of all kinds of political events that happen here installed with government. And this drives many ministers within the Israeli temporary, I would say, government to try and implement their policy as soon as possible. Now, one of the merits, and Mika alluded to it in his session earlier, one of the merits of the social impact bonds is really in order to make policy ongoing. So even after this cabinet member or government member leaves their position, the policy is ongoing because there are investors at the back. So I think there is a lot of good opportunities now to do pay for success or social impact bonds projects in Israel, some of which we have planned for a couple of years and will be implemented in this coming weeks or months. Regarding COVID-19, and that's my second comment, we in the Israeli National Advisory Board have approached the government with a request that when they do give loans and support, financial support to institutions and other businesses, they will tie the return of the loan to government with the impact performance of those businesses, mainly saying that if you show that you meet some impact metrics that were designed by the government, then the government can waive part or all of the debt that you have, the loan that you got from the government. The government did not pick up this one yet, but I guess at some point it will be picked up by the government. Now, regarding the social impact bond that we mentioned about elderly, so we are now launching this. We actually launched it last week. a new social impact bond to deal with elderly isolation population with this risk group of this COVID-19 time. We have planned this social impact bond for 2 years, so it was well before COVID, but now we see the necessity or the need for this whole issue to be tackled successfully with. We are going to do a pilot project which is very innovative. We are going to deal with a couple of hundreds of elderly people that are being in isolation as known by the municipality of Tel Aviv. We're going to give them intervention of 1 year that will be partly using volunteers in order to give them the toolbox or the tools to be able to connect with other elderly people and to consume social services that are being offered by the municipality. And the second component of this project is to use technology that can connect between these elderly people in a simple way. It's not Zoom. It's much more simple and much more suitable for the elderly. And it's an interactive content-wise platform that they can get content, that they can connect with each other, they can connect with municipal services, welfare municipal services. So it's a mix of low-tech and high-tech. It's the first social impact bond in the country. It's the fifth altogether, but the first one that will be paid. The outcome payer is the municipality of Tel Aviv. It's not the central government. It's the municipal government. So basically, that said, that if this one is successful, it can be replicated to 200 other municipalities in Israel and basically deal with all the elderly, isolated people. But I think that the most important part of this one is that out of 190 something social impact bonds that exist out there in the world today in 33 countries, this is going to be the first one that will be offered to the public. And I'm willing to share more about it on one-on-ones if somebody is interested. But we are going to use a crowdfunding platform in order to offer this to the public. The minimum needed investment will be $100, and we are going to raise $220,000 from the public, and the rest from institutional investors or high net worth individuals. I'm very curious to see how will this work, because if this works here with us in Israel, this can be replicated. Helped the Swedes and the Finns and others to do their social impact on tackling type 2 diabetes. And with that, I will conclude. And thank you very much.
You're welcome. Thank you. Thank you, Yaron. And just a quick comment to link this intervention to the journey we are having is that I saw in the chat box some comments on Europe and Israel. We know Israel is not geographically situated in Europe. We have done some research on this, and we are pretty sure it's not in Europe. But the case we have just listened is interesting, exactly because there is a very similar approach where the public sector, as we have seen in Sweden and in Finland, the public sector plays an important role. So that's why we open up and we ask Yaron to give us a quick contribution on this. And in line with this, I now ask Magarida Anselmo from the Portuguese National Advisory Board, and she's working for Maze to tell us about, let's say, opportunities and challenges of using again on the partnering somehow with the public sector, opportunities and challenges of using European funds in outcome-based models, which I think Portugal is a pioneer. The floor is yours.
Great, thank you. Hi, good afternoon, everyone. So yeah, I work for Maze. It's a Lisbon-based impact investment firm. And I wanted to share with you our experience as providers and intermediaries with using EU funds to finance outcomes-based contracts. So the Portuguese government has leveraged money from the European Social Fund as part of the Portugal 2020 Partnership Agreement to build an outcomes fund. And as we reach the end of this cycle, we wanted to share with you some of the opportunities that this has provided the European market, but also some of the challenges from our perspective as providers. And I know that someone from this fund is here, so she can tell me if I say something bad. So the fund was built to finance social impact bond outcomes. It's a 20 million fund. It's managed by a public entity called Portugal Social Innovation. It's a generalist fund, so it covers all sorts of social areas. And importantly, it's not rate card based, so the outcomes were not defined up front. They are usually proposed by the service provider and then negotiated on a contract by contract basis. It opens calls for applications and service providers apply together with the investors. So the opportunities that this has provided, I think the most obvious one is the availability of capital. So this wouldn't have been possible without mobilizing European funds. And because of this, in the last 4 years, 12 social impact bonds were structured in Portugal, which I think is very interesting and positions Portugal as one of the countries in Europe with the most social impact bonds. And the other thing is that what we see in the ecosystem is that more and more people have a basic understanding, at least, of what a social impact bond is, and more importantly, start talking with the language of outcomes-based commissioning. And this is the case not just for the providers that are involved in social impact bonds, but also for other providers seeking other types of capital. But we see them borrowing a lot of the language of outcomes-based commissioning, which I think is very interesting. So on the main challenges, two things. And I think the first one is that the involvement of the public bodies that are responsible for the public sector areas of these SIBs is very light. So even though, for example, for a SIB in the protection of children at risk, Social Security is involved and has to say in the beginning that they think this is relevant and has to follow the project, they make no financial commitments. They make no follow-up commitment. And from our perspective, they have a very low reputational risk linked to these projects. And of course, with this low skin in the game comes low engagement and low commitment. And as some SIBs are coming to an end this year, what we're seeing is that the conversations of how are these learnings going to be integrated into public policy, they are just not happening. It's almost like we're starting from scratch. And the other thing is that because this capital is coming from the European Social Fund, a key rule must be observed, and the rule is that it pays for expenses incurred. And what this means is that the investors get paid if outcomes are met, but they are only paid for the actual costs of delivering the intervention. So it's a cost-based payment. And of course, what this means is that the internal rate of return of these SIBs is kept at 0. There's an indirect potential return because there's a tax incentive to invest in SIBs, but still it means that the ability to attract new investors is very low. So what happens in practice is that we kind of get stuck with the same 10 investors that would probably otherwise put this money into non-refundable financing. So it has been kind of a mixed experience. What we would say from our perspective is that EU funds are a huge opportunity. We would not be where we are today without the European Social Fund, but they are also hugely influential in the kind of incentives that they create for providers, and in the case of social impact bonds, also for investors. And so we believe it is really important that European funds, particularly the European Social Fund, signals that outcomes are important, and also that the providers are important, and that this is not just a cost minimization game, because what happens when the European Social Fund only pays for costs is that the investors will also only finance costs. So the service providers have very little margin to invest in technology and to invest in all the things that make providers better. And so we think that if we want a really vibrant and innovative ecosystem of service providers in Europe that is not very commercially minded service providers that are getting VC investment, and then the old social economy that is on a completely different mindset, if we want something in between, then we think European funds are really important in signaling to the national governments and also to the providers that this matters. So yeah, this has been our experience here in Portugal. Thank you.
Thank you, Margarida. This is extremely interesting. I mean, also because I'm on the other side, on the side of the European Commission, and I'm really interested in understanding how, you know, all the mechanisms can be made easier to make easier your life and to achieve the goal. So thank you very much. I mean, we have seen that the public sector plays a crucial role, and now listening, Margarida, I was thinking that, I mean, the public sector, who is playing a major role, also needs some allies to build this market, and to this extent, I'm going ahead. So I'm not stopping now for questions in the chat box. Please, if you have, write it, and then we can discuss. But I'm going directly to Sarah Gordon from the National Advisory Board of the United Kingdom, and because she will help us to understand the role many intermediaries could play in building the market. So Sarah Gordon, the floor is yours.
Thank you very much, Giulio. Nice to be here with you all. I do hope we can see each other in real life soon. I thought what would be most relevant is to talk about quickly, depending on time, 3 or 4 of the initiatives that we're working on that involve interaction with the state, with the public sector, either at national or local levels, because that would seem the most relevant to the sort of themes that we're developing in this group. I'll stick to my 7 minutes. The first one is a project on place-based impact investment, where, I mean, as many of you will be aware, obviously the coronavirus pandemic has really highlighted the sort of inequities across our societies, and the fact that access to affordable healthcare or decent housing or proper education access is extremely variable across the globe, but also across all of our countries. And I think that's particularly true in the UK, where, as you know, investment and a lot of wealth, financial services wealth, is focused on London and the southeast. And the pandemic has sort of heightened awareness of those inequities. It's also aligned with one of the stated objectives of the Boris Johnson government, which is a commitment to level up regional inequalities. This is, of course, not the first time a government has talked about such an aim, and it doubtless won't be the last, but nevertheless, it gives us an opportunity to talk about the relevance of impact investment in its role in potentially levelling up those regional inequalities. So what are we actually going to do? I think one of the things that's most exciting about this work is that we're working with a whole range of different market participants, so that we've got a particular focus on local government pension fund managers, local government in the UK, and I know in many of the rest of Europe have a particular focus and commitment to place, obviously, because they tend to be their local authority, local schemes, but also working with corporate pension funds, local government, and investment professionals, whether managers or advisors, and then relevant trade bodies and local organisations. And we're going to do two things, really. I mean, what we're about at the Impact Investing Institute in the UK, which, as most of you, I'm sure, are aware, a year ago was established and replaced the National Advisory Board. The first thing we're doing is we're building an evidence base around current levels of place-based impact investing by local government pension schemes, because one of the things that I expect you'll all agree you really need to do is you need to be able to show how to do it, the best way to convince a new investor into the world of impact, or a current investor to increase its allocation to impact, is to show them what other investors, and particularly large institutional investors with a very clear mandate, like the local government authorities, what they have done and how it works and what returns you can expect. So this evidence base will look both at financial and impact performance. It'll look at asset allocations and different asset classes. And we're also going to review the existing institutional asset management models for scaling up place-based impact investing. So that's one of the issues and one of the projects we're working on. What I'll do is I'll quickly go through the others, and then if there are particular ones that you want me to come back on, we can perhaps do so in Q&A, or please do, obviously, follow up. We can follow up after the session if there's more information that is helpful. The second piece of work we've been very involved in is on social housing. One of the issues for institutional investors considering investing with impact is that they often feel that there are not assets at sufficient scale to attract them or to be appropriate for their portfolios. Housing is one of the real housing and wind farms in the UK, the real standout asset classes where you can say, obviously, there are assets at scale. And I think the reason that I thought it would be relevant to share this work with you is A, to get your thoughts, but B, to explain why we have worked with a series of partners to develop an ESG standard framework for social and affordable housing. Now, why have we done that? Why have we focused on ESG? It is because, for us, ESG is the first stage in the building blocks. You can't move to, if you haven't done the work thinking about your ESG footprint, your presence, your commitments, it's very difficult then to think about how you deliver positive social and environmental benefits. It's obviously a subject on which many people have opinions, but what we've done in the social housing work is develop that ESG standard framework, which we will then use as the building block to now go to the second phase of the work, which is to develop an impact standard framework for social housing. And we have found, I mean, the last year has been incredibly interesting, its challenges, of course, but one of the things that I think we feel very strongly at the Institute is that you have to work both with practitioners so that you can then inform your policy recommendations, and then you also need to work with the policymakers to help practitioners, to help facilitate impact at the practitioner level. And it's those dual focuses that have really sort of informed our work programme. So the third thing that's relevant to that is our work on reporting, where there is a lot of new regulation in the UK that is either encouraging or indeed forcing organisations to think about their responsibility to wider stakeholders. And one of the things that we hope will come following a recent review is a recommendation from the regulators that all organisations will need to produce what is being called a public interest statement. Raphael is telling me I've got 1 minute to wrap up, but I started at 13, you're right. We want that public interest statement to be an impact statement, i.e. when you think about your public interest and your relevance to wider stakeholders, you're thinking about your impact and the positive and indeed negative impacts that you're delivering for those stakeholders. And we hope to be working with a range of organisations to help them develop those statements. I shall stop there, Rafaela.
Thank you very much. We can go ahead with a question, which is a question I have, that is to introduce the friends and colleagues from the Spanish National Advisory Board. So how to become investment ready in order to promote social inclusion. So this is something I'm pleased to ask to José Ruiz de Munain and María Ángeles León López from the Spanish National Advisory Board.
Thank you. Hello, everyone. Thank you very much. It's a privilege to be here with you all. So I'll be very brief also to let my colleague María Ángeles speak about an interesting case. So first of all, a bit background of our National Advisory Board. We just entered GSG 1 year ago. We've been working hard on different aspects. In fact, I invite you all to attend our annual event, which is next week. So in Spain, if we talk about social service providers, it's a must to talk also about social economy. Social economy in Spain amounts around 10% of GDP and includes a number of social enterprise organizations that do provide social services like social inclusion and others, either in the form of nonprofits that do operate in trade in the market or nonprofits that just depend on grants. And it's important to understand our context, because while in other European countries impact investment was promoted, I think, by certain groups within the social economy, in Spain, this is not the case. In Spain, impact investment was promoted more like profit with purpose mindset organizations. However, we understand it's really important to keep very close to social economy organizations, and that's why we are pushing very hard also to engage with big service providers like ONCE Foundation, that is one of the major organizations in the world providing employment with people with disabilities, either mental or physical. And it's very important in Spain, at least, to connect these two words, social economy enterprises that keep working on a kind of traditional way, very important since they bring 10% of the GDP. And in fact, they've proven to be more solid during the crisis, at least the previous one, than mainstream economy organizations. But it's very important to bring both the words together. And that's why when I was told by GSG, we would like to present really an interesting case about this, bringing these two words together, impact investment and traditional social economy organizations together. So I told one of my board members, which is María Ángeles León, one of the leading impact investors in Spain from Open Value Foundation, to explain a very interesting case by Repsol Impacto Social and Amica Association, which is bringing these two words again together, which is something which is very strategic in Spain, because we want somehow to follow the path of the French, the Portuguese, or even the Italians. So María Ángeles, please go ahead and present the case, which I'm sure will interest everyone. Thank you.
Okay, good afternoon. Just a few minutes to explain to you how we mixed oil with water in a very good mixture. So Repsol is the biggest oil company in Spain, and they were really prioritizing their ESG. They cannot do anything different from that. Being very hardly punished for every investor because they are really dirty business. So they've been doing their homework in the environmental side for a long time, but they decided that they wanted to transcend that and to really help society in a more direct way. So that's why they launched the Repsol Impacto Social Fund last year in July, and with 50 million to invest in companies that were environmental friendly, of course, but also making an impact on people with disabilities or in people that are in risk of exclusion. So on one hand, we have these corporate people with their black ties working in a very traditional way. And in the other hand, we found this social economy in Spain, which is very big. José Luis talked to you about ONCE. ONCE has 800 million invested in social impact businesses in Spain, all of them related to people with disabilities. And then we found a 35-year-old association in the northern of Spain. It was managed by the parents of the children that are working in the different projects they have. When they launched it, they were children. They were really convinced that their children could go farther. They went to Europe, learned, especially from Northern Europe models, and realized that people with disabilities have abilities that could be made profitable and that will make their life independent. So these parents and this association, we put them together with the Repsol Impacto Social people. And at the very beginning, we have language problems. We were talking different languages, different cultures. It took us more than a year to reach an agreement, but I can tell you that it was in July this year that they signed an agreement from which Repsol Impacto Social is buying 35% of a recycling company belonging to Mika for 1.25 million euros. And they are already started working in scaling to the rest of Spain and make the business bigger. And hopefully through the years, this recycling model this disabled people is using will be part of Repsol Corporation and will be really a success in Spain. So that's the success case we really want to share with you, because I've always thought that impact investing is the Esperanto between the social economy and the traditional investment economy. And we did it once, and as Peter Thiel from PayPal says, difficult is to do from 0 to 1. But now that we have one, we really want to repeat, and we think we're going to be able to put more corporations together with more social economy businesses in Spain and slowly scale this model, and this model should become part of the company's revenue model. Thank you for your time.
Thank you, muchas gracias a los dos, and thank you very much to both of you. And I now leave the floor to the Italian National Advisory Board, because we know they are giving us an additional point on the value that can be generated through the use of virtual platform. So thank you very much for your presentation. Please, the floor is yours. Filippo Montesi first, and then Valerio Pellirossi.
Thank you, Giulio. I will take just a few seconds to introduce Social Impact Agenda, and the case study that will be presented by Valerio Pellirossi is a case study about the development of a platform model for delivering welfare services. So first of all, Social Impact Agenda per l'Italia is the Italian National Advisory Board to the GSG. We aim to support the development of impact investing in Italy as a powerful strategy to collect additional capital for social impact. And among the many challenges we have, one key aspect, I believe, at least in the Italian ecosystem, is matching supply with demand of capitals. And this case study, I think, provides a good example of an investment opportunity which both generates social impact and financial sustainability. And at the same time is a model that promotes public and private partnerships that are rooted at the local level but are also scalable at a national level. So I'm very pleased to give the floor to Valerio so that he can use the time available for explaining you this experience. Thank you.
Thanks, Filippo. Thanks, everyone, for this opportunity. Actually, I would like to start with some comments that Giulio himself made during this session that really frame my presentation. For example, I was impressed in the needs of the welfare services and impact investments to help in addressing new social risk and new social needs without leaving anyone behind. And the creation of and the use of platforms in Italy is really an opportunity of integration of services and a way for addressing in a new way and better old social needs and new one. And actually, the whole presentation is about the virtual platform that was created integrating the social services that were provided at local level from social businesses. The first virtual platform is called Tradate Welfare, and everyone can search the web, can find the platform. Actually, it's in Italian, but now we have tools that allow us to understand a bit what's going on around the world and translate it also. And it's a platform that enables local social businesses to provide social services to local administrations. This is a thing that is really particular in Italy. So local administration, municipalities are those providing social services to those in need. They engage non-profit bodies, social enterprises, often to provide these social services. But the platform is also a place where families and individuals can buy themselves social services that they can use for their needs, for assisting a person with disability or for children, for example. Social cooperatives in Italy, they manage kindergarten, for example. And in fact, what services can I find on the platform? I can find assistance to elderly, assistance to people with disabilities, services to families like kindergartens, as I said, or day centers and residential care for persons, for example, with mental illness. And actually, what happened in the lockdown and during the COVID-19 spread is that this innovation had a boost. From the first platform, Tradate Welfare, we experienced the creation in 3 months of 20 platforms all around Italy, ruled at local level with social cooperatives and in a certain area that were facing the same needs, but adapting the use of the platform to the needs of that local area. And another really interesting aspect during the COVID is that the existence itself of the virtual platform enabled the possibility to address the needs of people in a way that it was not possible to imagine before. We have the story of these two, an old couple living in the north of Italy, in Biella, that was in March and April locked down and without the possibility to face their needs of assistance. The sons of this family migrated abroad to find a path for career and success. They were living abroad. Thanks to the platform, they were able to buy assistance to their parents in Italy from abroad, from Canada, from professionals that they were allowed during the lockdown to move around and to give professional assistance to their parents. So this is really a key aspect that I wanted to highlight. Of course, the aggregation of services and the integration of the actions of services in a certain area
is really speeding up the measurement of impact in the life of people, in the individual lives, and in the life of the local area. So how it changed and how they can produce impact in the area. And actually, there is a process of scaling up with a national platform that from 1 to 20 platforms can serve the whole country in Italy. But I think this is also a method, and there's room for impact investing to speeding up further this platform. I'm in the 7 minutes total, I think.
You are incredible. The Italians did it.
Yeah, I trained for the marathon.
You made it.
Okay.
Good, excellent. Thank you very much. I think this is a very interesting field where impact investing is mixed with the rise of and the availability of new technologies, and this is something we need to be very careful, no? Because we have on the one hand social needs, raising social needs. On the other hand, we have a greater availability of new technologies, but then, I mean, somehow we need a kind of intermediation between the two, and this intermediation should be run by someone who is able to play on both sides. So that's why probably social enterprises, broadly speaking, cooperatives and similar bodies are very well fit for this kind of activities. So thank you very much, Valerio. I leave now the floor to our friends from Germany, and Florian Kollevin. I hope I said the name in the proper way. He is the founder and executive director of, and again another challenge in terms of pronunciation, but it's founder and executive director of Chancen, and he will tell us something interesting on how they are approaching and using impact investing within their activities. The floor is yours, Florian.
Thank you very much. I'm glad to be here and be able to present you the Chancen Cooperative and a way to finance education costs in a very fair and ethical manner, and introduce you to income share agreement model you may have heard about, and how we use that to support young people to follow their education. So I'm founder and CEO of Chancen. We are a founding member of the Federal Impact Investing Initiative. That's the German National Advisory Board. We are their partner member there as a social enterprise. So we are in this impact investee, receiving impact investments in various forms. Our topic is education. So we support young people or professionals to fulfill their potential to pursue their education, and an example, finance their tuition fees for tertiary education at universities, or we finance tuition fees at professional training if you do professional training during your career. How do we do that? We do that with a so-called income share agreement, something you may have heard of as the model becomes more popular in the US in recent years. We go back to a university where students developed that model in 1995, so 20 years ago, 25 years ago even. That's the oldest private university in Germany, which after 10 years of existence had to introduce tuition fees. And the students back then developed this model to make sure that everybody could study at that university irrespective of their financial background. The model basically considers that you first do a degree to then be able to be qualified and get a job and a payment. So the idea is that instead of paying tuition fees during the study, the tuition fees are paid afterwards. And the second thought is that nobody knows how high the future income will be, and that it is more fair if everyone would pay a fixed percentage of the income. And in that way, the students with the higher financial success are paying back more than the ones with less income. And we studied at that university. I personally used that model to finance my education costs at that university, and then decided to found Chancen Cooperative. So it's really a scale up to scale that model to other universities and professional training institutes in Germany and beyond, to be able to support other young students and professionals to follow their education. That helps universities in general to be able to be financed. Higher education in general is costly. It's either paid by the government or private. But to give you one example, medicine is in Germany, on the one hand, the most expensive study degree a public or private university could offer, which leads to a shortage of student study places. And on the other hand, there's a huge shortage of doctors in Germany. Currently 55,000 additional professionals are needed. At the same time, there are way more students trying to study medicine than there are study chairs. So more and more of them move either to private institutions or to other European countries to study medicine. Then they face tuition fees, and here comes in the Chancen EG with a fair option to finance that tuition fee. Currently, we have 35 partners in universities and professional institutes. Now coming to impact investments, we are financed by impact investors from all investor classes, so high net worth individuals, foundations, family office, up to pension funds, and have been able to raise 25 million in the last 5 years, equity mezzanine, and then a public bond that we issued last year to, on the one hand, be able to raise more impact investments, and on the other hand, to give every kind of investors, from private persons to institutional investors, the ability to invest in impact investments. So as you know, impact investments are sometimes a struggle to invest in, especially as a private persons. Private persons are normally equity investments, and with this public bond, we were able to offer that to all kind of investors. We used that 25 million to finance around 1,000 students. And our current goal is to raise another second 25 million in Germany to be able to finance the next 1,000 students in Germany and in other European countries. Besides that, and a bit beyond the topic of this session, we do an NGO subsidiary in East Africa, Rwanda, who offers the same model as, of course, the impact in enabling education is even higher than within Europe. So very happy to discuss that as well, but sticking to the European impact investment as that's the topic of this session. So I think I'm coming to an end here. I'm not following the time, but that would be from my side.
Thank you, Florian. Thank you very much. And as we are running out of time, I give the floor to our colleagues from France, Pauline Boulanger and Jean-Christophe Laugee. As we said, the ultimate aim of the European impact investing movement and the way in which the European impact investing movement worked in the last years is to reshape somehow the institutional boundaries between the market, the state, and society. I think that from Pauline and Jean-Christophe, from the French National Advisory Board, we are now going to listen something interesting, because they are working on corporates for inclusive growth. So they are pushing corporates to get engaged with the impact investing and inclusive growth. So please, Pauline.
Thanks a lot, Giulio. Hi, everyone. Yes, so I'm the deputy head of the Impact Invest Lab, who's the secretary of the French NAB. And at the French NAB, we're working on a lot of different topics, including social impact bonds, impact investment in developing countries, foundations as impact investors, insurers as impact investors. But today we wanted to share with you our insights on how to mobilize corporates on impact projects. And before leaving the floor to Jean-Christophe, who will present the case study, I just wanted to echo what Maria Angeles, not sure if I'm pronouncing right, Maria Angeles from Spain mentioned about the Repsol Impact Fund. So just wanted to echo that and share that we have also a lot of corporates in France that are setting up such impact funds in-house and run them in-house. And we have an interesting feature in France that is that the funds are capitalized not only by the company's profits, but also by a specific employee benefit, which is a company saving plans that is offered to all employees, and that is benefits from tax relief for the employees and also get good returns. And some of these company saving plans can be invested in impact investing and impact projects. And so these companies that set up these funds, they rely on this source of capital to set up their own funds and invest in impact projects. So, for instance, you have Schneider Electric, Danone, Renault, who set up such funds in to invest directly in impact projects. So I think that's a very interesting case that we have in France. And now I'll hand over to Jean-Christophe to tell us how corporates can also start their own impact project in-house. Not only they can be investors, but they can also start their own impact projects, often with impact businesses, in partnership with impact businesses. So Jean-Christophe will talk us through the B4IG coalition, B4IG standing for Business for Inclusive Growth. So this coalition was started last year with the support of OECD, and it gathers 40 companies, I think, as of today, and I see there are a few members here attending, so you'll know already about it. And Jean-Christophe is heading the B4IG incubator to help these corporates set up their impact projects. So Jean-Christophe, over to you.
Thank you, Pauline. So I'm very pleased to introduce you to this Business for Inclusive Growth coalition. It's a worldwide coalition. Well, we are very proud to welcome this coalition in France, because the OECD office is also as well in France. But it's going far beyond France, Europe, and it's aiming at reaching different type of geographies in the world. As Pauline mentioned, this coalition is gathering today more than 40 large organizations and a network of non-for-profit. Among them, you will find the Gates Foundation, for example. So the specificity of this coalition is based on three main activities. First of all members basically signed a pledge to basically support business practices around inclusive growth, aiming at promoting equality of opportunities, eliminating gender disparities, and reducing spatial inequalities. There are working groups that are basically trying to identify the different barriers to inclusive growth and formalizing commitment to foster common standard and practices around those three topics. The second dimension of the coalition is around an incubator. So we want to move commitment to actions, and we are today not only generating new program, we are also supporting existing program. It's an incubator and an accelerator. And we do have inside this incubator 12 projects that are aiming at growing with three main work that we do. We strengthen their business model. We support their theory of change and the impact measurement element that is an important topic to prove the positive impact of those programs. And we help them to design a strategy at scale. And last but not least, there is a financing forum that is aiming at becoming a fund that will gather a group of potential investors, because of course, those different programs and new practices are looking for potential investors to support the scale up. Just to give you a flavor of what is going on inside the incubator, today there are three elements, three types of projects that we are supporting, providing access to underprivileged people to three main things. First of all is financing and technical services, access to qualification and job opportunities, and access to basic products that are important for them to support their development of their business. And to give you an example of project that we're dealing with, there is a program in France named Lemonade that is supporting circular activities, waste valorization with social inclusion. This program is supported by Danone. There is a program launched by L'Oréal named the Industry Academy, aiming at providing a qualification to long-term unemployed people to become a production line operator. There is a program that will be launched by Sodexo in a very difficult area nearby Paris, providing access to jobs and services to citizens that are living in a place where you speak 100 languages. And last but not least, there is BNP Paribas that is trying to provide access to underprivileged youth to a set of banking services to continue their study at university or any type of school. So it's just to give you a flavor and what all those programs are facing today. Of course, they have to monetize and to be able at first to prove their impact and monetize those impacts so the outcome could be recognized by investors. And also as well, there are some capabilities, mainly social businesses, that still are looking for investors to grow their operation. I am thinking today about Lemonade, but also thinking about the Sodexo operation that will be launched soon. So hopefully by gathering those three dimensions, working groups stating the standards, an incubator that is basically showing into practice what means inclusive growth, and investors, we believe inside the coalition that we can foster change at scale. Thank you.
Thank you. Thank you. Thank you very much. I'm now opening the floor for questions and comments, if any, from those who are attending this meeting. We have a few minutes, but I'm opening the floor. I know that, for instance, Vanessa from Israel was going to say something.
Yes, thank you, Giulio, and thank you everyone for interesting presentation, and bravo the GSG and Rafaela for putting this session together. Very inspiring work. I entered the position as the Israel NAB director 6 months ago, and the Israel NAB went through a deep process of re-strategizing and learning from the amazing European NAB's work. The Israel NAB has been existing since 2015, but in this process, we've learned a lot from our counterparts in Europe and the rest of the world, and learned that we need to be more inclusive and to be able to have a representation of all the pillars of the ecosystem in our work, especially to try to work more closely with the government. And so we decided to launch the Israel Forum for Impact Economy in order to be more inclusive, instead of just talking about the supply of capital as impact investing, but to talk rather about supply, demand, policy, intermediaries, and everything that is to it, and the different financial tools that there exist out there. And I would like to share with you that in November 30, we will have the official launch of this new forum, and I would be happy to keep one-on-one discussions on that after the summit. Thank you very much for the opportunity, and bravo.
Thank you, Vanessa. Rafaela, I don't know if you have some questions or comments from colleagues.
No, I don't. I think we can go to the conclusions, unless someone wants to make a question at something. We have 2 minutes. Okay. So I think
it's Laura from the Dutch NAB. I just wanted to say hello to everyone since we officially joined today, and feel free to get in touch if there's anything we can do together. I'll certainly will with everyone.
That's true. Congratulations. We have a new NAB. So next year, probably we will need to split this session into considering the number, or having a 3-hour session for Europe. Congrats.
Sure. Well, yeah, we should, and then we should have these kind of meetings more often, even during the year. I mean, it can be very useful, I think, for building the community, but also to get into the deeper level of the issues we face on a daily basis doing impact investing, or I mean, from my side, understanding how people do impact investing. So sure, well, we are now we've now finished this kind of very exciting journey, but it would be a real pity to forget that in Europe we have a special player. This special player, it is a unique institutional and political entity, the European Union. So I'm very pleased to give the floor to Georgia Efremova from the European Commission. She is a colleague, and she is also a member of the European Advisory Board. Georgia, I give you the floor. I leave you the floor for a conclusion, for a final remarks. I know that you are a champion of impact investing in Europe, within and outside the institutions. So I would like to ask you, what is the view you have from a European institution's perspective when it comes to available and upcoming measures to support impact investing markets? The floor is yours.
Okay, thank you, colleagues, friends, experts. It's a pleasure to be with you. And yeah, so it has been a very rich set of presentations. I would like to offer some of the, concrete opportunities that we have to support such initiatives and more. Very much also in the spirit of what Giulio started with. So how to really support those transversal activities, non-linear, not systematic, on-ground activities in a good way so that they can grow and really help to build better towards socioeconomic resilience. So I will be as practical as I can because I see the time. We've reached the end of the hour, and just in case I'm interrupted by the moderator, I have just pasted a few links that you can consult in the chat box, but I will try to go over them very, very quickly. So indeed, yes, as you know, the EU Advisory Board for Impact Investing, that is composed of the Commission, the European Investment Fund and Bank. We have been working for a while now in developing a set of tools, both financial and advisory tools to support impact investing in Europe. So I won't go into details. Most of you would be by now familiar with the tools developed and implemented by the European Investment Fund. What most of you may not have seen yet is the new platform we have, advisory platforms for social outcomes contracting, in its new page. So I have the first link I have pasted there is for that, and that's really a unique opportunity that we have for supporting, well, the public sector. So both horizontal activities for engaging member states, increasing the awareness, skills, ability to step into this kind of arrangements, communities of practice, but also very tailored support measures that we have for various public authorities wishing to launch a social outcomes contract or a co-creation process as a wider exercise on the national level. So typically, we get many enthusiasts and many people we interact and engage with as Commission, coming mostly from the financial sectors, civil society, philanthropy, etc. It's harder to reach the public sector. So the request that we get mostly is help us get our public authorities on board. So the social outcomes contracting platform is a response to that. So for any of you wanting to kind of get them sensitized in your member states, you can send this link, and or we can let us know who to invite to the next European level events if we want to energize and well, galvanize support. But these are the better known ones. And now, sort of in response to what we heard during the presentation, I want to highlight two other important opportunities. So the first one is in relation to the actions the Commission is developing to support social innovation. And you may know there is a new social economy for social innovation action plan in development that will come out in 2021. But these are measures that were already sort of planned and now launched under the ESF program and the EASY programs. And there, we don't talk about social impact investing, but social innovation and social experimentation are very much about supporting bottom-up approaches based on partnerships between the public authorities, the business sector, and the social sector. So it's still in that same spirit, although the words are different. So we don't use social outcomes contracting or social impact investing. But so in the new ESF Plus proposal, so that will be for the next period, 21 to 27, there is going to be a very much strengthened focus on social innovation. So member states are going to have to establish funding priorities to support social innovation locally. But very importantly, what we have from the central level is also a series of calls that will be directly funded from Brussels to support social innovation in ecosystem development. And the second link is one such call that I want to bring your attention to. It's basically a call for supporting the establishment of social innovation competence centers in the member states. Okay, so very relevant. For you, I think, because not everyone is so lucky as Finland to have their Ministry of Finance mandate and support the creation of a competence center. so yeah, so for all those who are working hard to institutionalize something or create a body for expertise and support to develop the capacity building in the public sector and also in for the other ecosystem participants, that is very much the goal. So in addition to capacity building, it will support transnational transfer of knowledge. So from those member states that are more advanced, like Finland or Sweden or Portugal, or France, or let me not name, but 2 other member states that are earlier on this journey. And also will support sort of the joint development of models and tools and best cases for dissemination across participants. And the very exciting thing, so this call is open until the 15th of October. So still in time to develop good applications. It's for 24-month projects. You will see in the link 5 million total for this call, but it means that for the 7 to 9 proposals that will be chosen, there is something like between 500 and 700K thousand euro, which is a hefty sum for someone to do some really good activities. And the good thing is that what the Commission is planning is to also launch a European level competence center for social innovation to support the work of the national centers and coordinate the activities, the networking, the exchange, etc. And this call will come out in early 2021. Okay, so watch out for it. I see the time, so I won't say more about this. You can consult the link, and then the next link that I have sent you is a little bit the bigger picture, but it's a lovely opportunity for you to engage into this policymaking process. It's on the issue of green bond standards and social bond standards. So it's part of the work of the Commission on the Sustainable Finance Action Plan. Well, you know, green bonds is a part of that. Green bonds are a still minute segment of the total global bond issuance, even though we know their role will increase now. And I heard in one of the previous sessions that social bonds that are just a fraction also of the sustainable bonds, social bond issuance has tripled in the months since the COVID outbreak. So that's quite interesting. But the Commission has been looking at developing standards for green and social bonds already in the last 1 year. This is something that was announced as one of the actions in the European Green Deal investment plan, and there was a technical expert group that produced a report last year for this. So very much the work is with the goal of obviously to increase the clarity on what is green investment, to kind of simplify it and ease the reporting and review procedures, and to make it easier to attach financial incentives to this kind of official standards. They will be voluntary, but still the first official standard by a public body. And what I wanted to say is that the consultation for this is still open. It closes on October 2nd. So there was a earlier consultation on the renewed sustainable finance strategy that's closed, but the targeted consultation for green and social bonds is still open. Please contribute, because the really great things that we heard from Sweden on new impact bond models and attracting institutional investors, or crowdfunding solutions for funding bonds that were from Netherlands and Israel, those are so relevant for colleagues to hear and kind of take on board in the policymaking process. Please take the chance to engage with EU policy, and then the outcomes of this exercise will be announced in December 2020, when we will have the official publication of the Commission's renewed sustainable finance strategy. Okay, and the third very quick point, but very important based on what I heard, of course, the perennial questions of ESF and social outcomes contracting and outcomes funds. It's so tricky. Portugal did amazing acrobatics in the last period to set up such outcome fund with ESF financing. So it's still really hard, but they're as you may know, important simplifications in the current proposals for the funding starting from next year, because we have this simplified cost option and the financing not linked to cost. The EIB advisory produced actually a report last year using Portuguese consultants on how far these simplifications take us. Truth be told, we did good as Commission, but there are important barriers still, because if you want to use ESF money to set up an outcome fund, you still need to declare upfront how much, for what kind of activities, and all the things that are impossible to know ahead of time. You know, these metrics, the sums, the final amounts only come up at the end of the extended negotiation process between the partners in the social impact partnerships. So that's a real missing the mark from us as a Commission, because it's hard to know these amounts up front. It's hard for the member states to make use of that. But there is a new funding pot on the table, and that's the Recovery and Resilience Facility. Okay, it's 650 billion. If anyone has heard, it will be basically programmed upon the development of national recovery and resilience plans. The member states are starting to elaborate now for the next months. So this money will be much more flexible. I mean, more stringent, because it has to be really spent on reforms and investments that are linked to the semester priorities and the country-specific recommendations that countries have received. Now, in parentheses, most of those concern social protection, social resilience issues that member states find harder to solve. So most of them are lagging on those. So it will be more guided spending, but more flexible use without all the rules of the ESF. So great opportunity to make a use of that. If I heard Mika right, and they really tap into the recovery and resilience funding for their 100 million outcomes fund, they're going to pave the way yet again as Finland, but hopefully make it easier for other member states to want to use the funding in that way. We are already, as Commission, starting to engage with different sectoral partners and work on thematic outcomes fund facilities, because we find it easier to set up smaller vehicles and start to engage and bring the world of outcomes-based practitioners and kind of the policy stakeholders in the smaller groups. So watch out for some of our outcome funds that are from central level, so multi-country and multi-sectoral, but for any of the member states that has local activity and wants to tap into and wants to use EU funding, so Recovery and Resilience Facility, it's a huge opportunity. I stop here.
Thank you. Thank you, Georgia. This is a pretty long list of opportunities, and this is a good sign, a very good sign of how much the European project is close to this new way of looking at the economic dynamics and the business dynamics with a social purpose and with a social impact. So thank you very much. This is very helpful. So we ran out of time, but I think it was worth to spend this additional 10 minutes to look into these opportunities. I'm not providing any conclusions, of course, also because the richness of the European impact investing experience we have seen today is a kind of invitation to go ahead with this amazing journey. So I would just say arrivederci, see you soon, hopefully in person, and enjoy the continuation of the Impact Summit that this year is especially exciting